for the daily candle to close then, if you're only looking at the daily and the 4 hour. See, you waited for the daily to close, it closed with a rejection. This gave you a nice idea that, okay, we could probably take buys to go up. And then if you're being cautious, you're waiting for this candle to close. And then now ideally you say, okay, if price is moving up, I can maybe have a stop below this daily candle, because since it's respecting support, it might be strong support, right? Right below this here, and the next one should continue moving up. You don't take sells in the 4 hour because we're in daily close, correct? Yes. So you're waiting for the daily to close. When support determined on daily, yes, exactly, right? But the smaller time frames, they'll basically give you like a lot more information, right? Because let's say if this was a 5-minute time frame, right? So you see a bearish candle, you say, oh, you know, bearish candle, it might keep going down and whatnot. So that's why it's really important to look at the overall time frame and trade based on that. Every day you draw a 4-hour zone. Can I take a breakout trade if the hourly candle has closed but the 4-hour has not? Again, it depends on what the chart is doing. We're going to go into some examples here, but it always depends on what charts are doing, because when we start asking questions, what if this, what if that, there are a lot of subjective questions. Trust me, you can come up with questions every day at all times, but it all depends on what you are seeing in the moment, right? Because every day is going to be different, and if you're analyzing every day, you're going to have different perspectives and different approaches to the market. So like, we're all going to learn over time, as we go. So let's go over to the next example here. What we got 4-hour versus the 1-hour time frame, right? So this here we have the 4-hour chart, and then we have the 1-hour chart, right? So what we're going to focus on is that how to catch this move down, right? Because now when we're trying to tell a story, what we're basically looking at is we're looking at support being formed on the 4-hour, and then we're looking at this resistance zone here being formed, right? Because if you look left here, you can see that maybe this candle was coming down. This candle was coming down, like, the 4-hour went down, it formed support, it started to go up, and then you had this reversal, and then it started to form support here again, and now we have resistance, right? So once you have a move down, and then price is starting to range, can you trade in this range? No, you can't trade in this range. You wait for breakouts, right? Your breakout happened on the 4-hour, and this was probably like a retest to continue down. But now we're going to look at the 1-hour time frame, and we're going to see how can we catch this move down. We wouldn't take trade top of the range. No, David, I'm going to answer all your questions before you even ask them. So just go with the flow. So we're going to go on the smaller time frames to see how we can catch it. Let's go to the 1-hour. All right. So now we are here on the 1-hour. So now if you look, this was the entire 4-hour range here that was consolidating. Makes sense? But on the 1-hour, now you see a lot of information. Now you see a lot of candles, like, they're moving, like you have some consolidation here on the 1-hour. Maybe this time here was a time when there was a lot of volatility, right? So now when you're looking at the candles, what you're saying to yourself is now, okay, if you're looking at the 1-hour candle here, you see it's starting to form support based on the next one and the next one, right? So you form support, candle form resistance. You had this candle, it formed a kangaroo tail. Then you had this bullish candle. Now the thing is, this bullish candle, it did not close above in a way that you can say, okay, it's going to continue to move up, even though it was a bullish candle, right? Because just this bullish candle, it has to, I think it'll kind of close above these wicks here so that you have a strong confirmation, okay, we're starting to go up. Makes sense? Because now when you look at the next candle, you have support, and then you have resistance here. So now if you have sell stops, you're catching this move. But if you're waiting for this 1 hour candle to close, you know that, okay, it's closing below these candles here to the left. Make sense? You're looking at individual candles. This is very, very important. So when price is coming down, you're looking left constantly. You're looking left and you see, okay, this is where 1 hour had support previously. And this closed below it. So now you can say, okay, like, you know what? Based on the 4 hour, there is some room for it to continue moving down. Make sense? So now let's go back to the 4 hour. See this move down, and price started to, you know, move up, and then it continued to move down. But if you look on the 1 hour, this candle right here on the 1 hour was the liquidity graph on the 4 hour. You look left, see the wicks match up. I hope I could have people here on the mic and then do some quizzes with them. Quizzes would be fun. But we're gonna have some quizzes planned too. All right. 4 hour versus the 1 hour. Okay. So now, oh, someone's gonna get the mic. Okay, perfect. So now let's take a look at this consolidation area here, right? Some people call it consolidation, some people call it ranging, some people call it goat shit, right? Because candle goes down, candle goes up, candle goes up, candle goes down, candle goes up, candle goes down, candle goes up, candle goes up, candle goes down. Can you trade this on the 4 hour? No, not at all. But when you look on the smaller time frames, you start to see some more information. So that's what we're going to do. We're going to now look at it on the 1 hour time frame, and we're going to see what information can we find from it. There we go. Now let's take a look at this information here. Right? This is not analysis. This is just a way to read candles. Okay? This is just a way to read candles. Right? So we're going to start. We're probably going to start from right over here. Right? Price went up, closed above these candles here to the left. Okay? Closed above. This means, okay, momentum is up, because, you know, we had a strong bullish candle closed above these candles to the left. There was only one wick here, so this means, you know, now we're preparing to go up. Next candle went up, strong bullish candle, and then you have another bullish, and then you have a smaller bullish candle. A smaller bullish candle, now it would mean, is that, you know, the momentum is dying down. Plus also, if you look at the wick it's making to the down, this is a smaller wick than this wick. Now, when candles form wicks like this, let's say, with the bigger body, this means this wick, I look at it as like a rocket ship, as if there's a flame underneath this candle pushing it up. So now the flame is dying down on this recent bullish candle, and the next bearish candle we have right over here, right? So now price starts to go down. When price is moving down, you're waiting for price to form support, because now essentially, like, you know, price was in bullish momentum and price made a high. Remember we talked about price making highs and then coming down to make some sort of support? That's exactly what's happening. Price made a high, it broke this resistance zone, and now price is coming down, so you're waiting for price to make support. Where will price make support? Check this out. Right? Bearish candle formed. This gives us no indication that price is trying to go up. We have another bearish candle formed. This also gives us no indication price is moving up, right? Now we have a bullish candle formed, right? And this is the 1 hour time frame. So 1 hour has made support. So now essentially what you can turn around and say, okay, now maybe you can have a stop below the 1 hour candle, because now price made a high. So price is going to come up and it's going to retest that high. right? And if you have stop in, let's say, if you have a stop in profits, you get this bonus move up. One question, may I know why the first resistance you're explaining is not at the top of the wick? The first resistance you're explaining. This one right here? No, it's not at the top of the wick because when you're, remember what I talked about candles? I'm going to explain that. Man, you guys need to take notes. You guys need to take notes. When we were talking about candles, we were talking about, let's say this is a bullish candle here. So price opened down here. It closed over here. It tried to go up, but it couldn't close here. It closed over here. The close matters, right? The same thing happens on this candle you're mentioning. Price closed here. See the close? Price, well, actually price closed down over here, right? So it tried to go up, but it didn't close over there, right? So this is resistance. Let's see here. Would you try to enter at the support in the current case, or would you wait for the first bullish candle? Yeah, we'll wait for the bullish candle. You wait for confirmations so that you know where to put your stop loss, because if you are entering on this bullish candle, right, and it's not closed yet, you don't know whether this is going to close bearish or bullish, because you don't know. You can take a chance, it can work out, but you just don't know, right? So you have to form a system, right? So now when you're waiting for this candle to close bullish, then you know, okay, the candle has closed bullish, 1 hour has formed support. So now number one, bias is bullish, okay? Number two, where will your stop loss be? Okay, stop loss should be below the 1 hour candle, because now as long as price stays above this area, we should continue to move up to retest this high it created, right? And then price went up, and then started to come down. It came down to the same support, right? So what happened here? Same thing. Price made a high, right? 1 hour from support, price went up to retest that high, and went down again. Like, and the cycle continues. It's not going to be like this all the time, but it's just to give you an idea. So now we're going to look at more time frames. We're going to look at the 5 minute, the 30 minute, and the 15 minute. All right. So this is the 1 hour time frame, right? We're going to look at the 1 hour time frame, how, like, the candles coming down, and basically we're going to start with support here, consolidation, and then the move up, right? We're going to look at it on the smaller time frames, because on the 1 hour time frame, what's going to happen is that if you see this bearish candle, you can turn around and say, oh, look, we've formed a bearish candle which is stronger than this bullish candle, so the next candle can come down and fill this wick and continue going down, right? But when you're looking left, oh, let's remove this. But when you are looking left, you see that it broke out of this resistance, because if the 1 hour candle, this one went up, and then this one rejected the price and went down, this means this is resistance, because this level is resisting the 1 hour candle to go up, right? In the same way, when the 1 hour candle comes down to the same area, it looks left and sees, oh, wait, we rejected this area before to go down. Now it should reject this area again to go up. Makes sense? So now we're going to look at smaller time frames, and then you're going to see some more information here. Losing my voice, man. God damn. All right, let's go to the 30-minute time frame here. There we go. We got the 30-minute time frame. Okay, now this is where you're going to learn about like candle closes, right? So basically, we had support on the 30-minute, right? We had support on the 30-minute. 30-minute candle formed bullish. Now you look at yourself and say, okay, 30-minute candle formed bullish. So now what we can do is maybe the next candle is going to continue to move up and we can have a stop below the previous 30-minute candle. Oh, perfect. You take a buy, you know, the next 30-minute candle, look at the way it's closing. It closed above the previous bullish candle's open. Makes sense? It closed above, which means the next one will continue to move up. It moved up. It broke this resistance here to the left, if you're looking left. And then it kind of started to consolidate above it. See this close? It's closing above this resistance. Right? And then the next candle formed bullish, and then we continued to go up, and then we had this consolidation here. So now we're going to look at this in more detail on the 15-minute chart. Right? This is just an exercise to get yourself accustomed to looking at all different time frames and visualizing the higher time frame. This is how I exactly learned how to read market structure. Okay? See, so now this is the 15-minute time frame. See, now we have a lot more information. Now I'm pretty sure like a lot of people are understanding this 15-minute versus the overall 1 hour, because now you have a lot more candles to deal with here. Look at this, a lot more candles to deal with, right? And then looking left, you see the same area being respected, right here. Same area being respected. Price tried to go down, but it could not close below this resistance, closed above it. Makes sense? It formed bullish, and then we had another like big wick rejection. Momentum was up because we broke this resistance. We made a high, did a retest to continue to go up. Hiraki, are you going to sim at the end? No, I'm not going to do simulation in the end because there's a lot more left. I think there are like 2-3 hours more left here. But we're going to try to squeeze in a simulation on Saturday, next Saturday. Because I'm going to give this week for everyone to just, digest more information, come up with more questions, and we're going to have a document placed in the drive where everyone can, put down their questions, and then we can go over that next Saturday as a refresher webinar. So now let's look at the next one. Is going to be the 5-minute time frame. It's going to be a lot more information. See this, the 5-minute time frame. Not even what can you do here? If you're looking at the 5-minute time frame, with every candle closing, you're going to start to confuse yourself. Trust me. With every candle closing, you're going to start to confuse yourself. That's why it's really important to only stick to the 1 hour and 30-minute, and maybe the 15-minute at times, because you want to see clean candles. Because when you're looking at the 30-minute or 15-minute, you're waiting for the candles to close. And that's giving you more opportunity to catch bigger pips. Because if you're looking at the 5-minute, man, good luck, bro. Because with every candle closing bearish, let's say like this, the next minute you're thinking, oh, it's going to drop. So you take sells, but it pulls up. You see? Let's go to the next example here. So now we have a lot of consolidation area here. I know a lot of people don't really look at consolidations, but I look at consolidations on the smaller time frames to study market structure, right? So now, from first glance, this makes no sense, okay? When you see this happening, you don't have to even try to make sense of this. Trust me, if you try to make sense of this, what's going to happen is your mind is automatically going to show you a trade that does not exist. Does that make sense? If you try to make sense of this, you're going to try to squeeze in a trade that does not exist. So when this happens, you just stay out. You just stay out of it. You don't try to be a rocket scientist to solve this problem, because this problem is there to misguide you, right? Or this problem is just here, the market is consolidating. It's really easy, right? Market is consolidating for a big move. So basically what you want is a breakout down or a break up. Will we get access to the simulator to practice? Yes. Yep, I will give the codes out next week, from Monday. Yeah. Okay, so let's look at the smaller time frames here, and let's see what information we see. See this? This is a smaller time frame. This is a 30-minute. This is a 15-minute. See this? If we drew these lines on the 1 hour and just look at it. Look at this mess. This is where you stay away. What the fuck is Netflix making my food interesting? yeah. So this is goat shit. This is where you stay away. You don't really try to take a trade, right? And then some people, what they do is to try to go in the 5-minute time frame. Let's look at the 5-minute time frame. See this? This is where traders come to die, right? This consolidation. Let's go again. 1 hour, 30-minute, 15-minute, 5-minute. Nothing. Makes no sense at all, right? Maybe you can catch this move going down, targeting this support, but then again, you are building bad habits, right? So that's very important that once you see that, okay, the high time frame is consolidating, you try to, stay as far away as possible. Okay, let's go to the next example here. I think this is the last example for this 1 hour, 30-minute, 15-minute, 5-minute stuff. So what we're going to do over here is we're going to look at this support being formed, this area being respected, and then this continuation. And then we'll see what's happening here, right? So when you're trying to tell a story, you're trying to see same thing that we talked about. Okay, so this is the 1 hour time frame. Now, 1 hour came up, it created a high, right? But now what you're doing is you're also looking at the time here, right? What's this time? This time is 12 p.m. and then this time is 3 p.m. I'm pretty sure not a lot of people are trading at this time of the day, 3 p.m., because this is consolidation time, right? You need to be very aware of these times. So now when you're coming on to trade, let's say you're coming on to trade for, so now you had this resistance and you're coming on to trade for London session. See this? 4 a.m. London session, and you come on, you see this bearish candle close, and now when you look left, you see that there was resistance there. So now you wait for this 1 hour candle to close. It closed bullish. So again, what do you say? That, okay, previously price made a high, now we're at support. The 1 hour candle formed closed bullish. So maybe we can have a stop below this candle in the anticipation that, okay, as long as candle stays above the previous 1 hour, we should continue up to fill this range. Make sense? Yeah, wick fill too. But if you're holding longer, then you can expect to fill this range, right? And then you get bonus pips as price starts to go up. How many pips below the support? No, I'm talking about stop below the candle. Below the previous candle, because it's forming support on the 1 hour, right? So we're going to go over more examples here too, right? So now the candle went up. We had this bullish candle. There's no confirmation for sells yet. And then maybe if you're waiting for this candle to close, you see that it closed bearish. So then, it started to go down. In the same way that, you had a low here, so price may come down to retest that low. So now let's look at it on the smaller time frame. This was the 1 hour time frame, so we're going to look at it on the 30-minute, 15-minute, and 5-minute. There we go. See this? So this is 4 a.m. when we're coming down to take the trade, right? And this is resistance, and then this is support here. Make sense? On the 30-minute. So now either you're entering on this 30-minute candle, or you're waiting for support to be formed here. right? So now if you're looking at the second support form, what you're looking at the candles, right? So now let's look at this bearish candle right over here. Look at this candle, man. This candle closed wherever it closed, right? Okay, whatever. And now you're looking for the next candle to close. When this candle closed, it closed bullish, rejecting the support area. So now when you're trying to enter a buy, you're saying, okay, as long as price stays above the previous 30-minute candle close, the current one should continue to move up. And it continued to move up to fill this range. Makes sense? This won't, if you're having a hard time understanding this, it will take a couple of practices. It takes a lot of practice to truly grasp this concept. This is a perfect example of what happened if you don't wait for candles to close. The bearish candle, yeah, exactly, right? So you're always waiting for candles to close, because sometimes, price is gonna go your way, you know that, but the candles haven't closed in that. Let's say the candles haven't really closed in that aspect where you can say, okay, should continue to go that way, right? So that's the thing. So you always got to wait for candles to close in a way that you can say, okay, you know what, this makes sense. I've seen it. I can probably have my stop loss at a certain position too. Okay, so now this was a 30-minute. We're going to look at the 15-minute. Let's go to the 15-minute. See, this is the 15-minute. Now look at the mess we have on the 15-minute. Look at this. Now, if you're looking at this on the 15-minute, you're probably thinking, oh man, what did I get myself into? Right? So this goes back to the fact that if a smaller time frame doesn't make sense to you, you go to the larger time frame. If the 15-minute makes no sense to you, you go to the 30-minute. If the 30-minute makes no sense to you, go to the 1 hour. Because then you start to see clean moves. You start to see clean candles. Look at these two clean candles here. 1 hour closed bullish from support. You can have a stop below the 1 hour candle, expecting the next one to continue up to fill this range. So now if you look at it on the 30-minute, you see some mess here. And then when you look at it on the 15-minute, you see a lot of mess here happening. Make sense? So now on the 15-minute, you can basically say that, okay, you know what, we were consolidating because you're talking about market structure. We were consolidating, price moved up, and then we had some consolidation over here, and then price continued to move up to fill this range here, right? So now we're going to look at the 5-minute time frame. Let's look at the 5-minute time frame. Let's see what's happening. Now we're looking at the 5-minute. Holy, look at this. So now this part on the 5-minute, this area here is basically this consolidation right over here, right? And if you notice this part here, these 1, 2, 3 candles, this is basically this consolidation right over here, right? So 5-minute, a lot of mess here, but a lot to learn. Look, price went up. It started to consolidate. 5-minute formed support, and then it started to go up. But if you look left, that move up was the fill of that range. This session is like slapping me up. Wake up. Yep. That's the thing, because you have to be aware of candles are doing. Right? You really need to be aware of candles are doing, and you really need to be aware of what the fuck is going on in the market. Right? It's very, very important. And the only way you learn that is by looking at candles, but it takes time. Most people don't want to put in the time. They always want to rush. They always want to it's just, rushing doesn't work. Trust me. Rushing doesn't work. It just takes time. All right. Let's go to the next section here. Oh, we got 101 people here. The first Disney movie I watched was 101 Dalmatians with the Cruella, Cruella de Vil. Yeah, Cruella de Vil. Then they had 102 Dalmatians because the dogs gave birth to another one. Okay, let's go next. All right. Okay. This is pretty exciting topic here. We're going to look at rejections in zones. Like what happens when price comes into a zone and it starts to reject it, right? So when rejections happen when there are a lot of candles forming in a zone, right? So a lot of people, they've probably heard about this. They've seen this shape here, right? Oh, you know, like price go up, boom, 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 consolidate and down. But most don't know why it happens. Okay, what's a lot? Yeah, we're gonna go over that. But most don't know why it happens, right? What happens was that price starts to trend, it trends up, and then starts to consolidate, right? It starts to consolidate. So when it starts to consolidate, there's a high chance that it's going to continue moving down because now it has this empty space to fill, right? Rather than continue to move up. But it also depends from situation to situation, right? But in this zone, when price is consolidating, I think it's very important to look at the 15-minute candles and to see if they are actually going to break the zone or reject the zone. I mostly look at the 15-minute and the 30-minute candles because they give a lot more stronger confirmations, right? And normally it always works. But it's also not important to focus on how many candles, but it's also important on the market timing, right? Like particle pips, you mentioned what's a lot. It goes on to say, like, let's say if you wake up at, let's say, London Open, right? You're up at London Open and you say, okay, London Open is consolidating. Now, you know, if London Open is consolidating from, let's say, 8 a.m. GMT to like 8:45 a.m. GMT, then you know that at any given moment, it can break out of that consolidation. So that's where market timing comes into play. We're going to go over market timing here as well in the next few examples here. So those are rejections in zones. We're going to go over rejections in zones. Someone told me that rejections in zones and continuation through zones are two very important topics. Okay, when candles are not able to